Hey guys, this is the Trading for Dummies series brought to you by Mastermind Trading. Introduction. In the previous video, we looked at the fractal nature of market. Now, in this video, we want to look at how in reality that is applicable by looking at external and internal market structure. Usually, when we are taught to identify trends of ups and downs, we are basically taught to identify trends in impulse and corrections. Basically, we are taught that a trend moves in impulse and corrections of highs and lows in both uptrends and downtrends. Now, that's the basic patterns that we look at when we are looking at both uptrends and downtrends. What you notice in reality when you open up your chart is that the market moves in trends, but not in clear trends of impulse and corrections like we are taught. The market moves in trends of maybe there's a bigger trend, and then there's this smaller impulse and correction in between that trend. The market doesn't just move in this straight line of impulse and then a straight line of correction, either in a bull market or in a bearish market. When you open up your chart on any time frame, the clear trend that can be identified is usually referred to as external structure, while the internal movement, this little impulse of up and down that can be identified, is what is referred to as the internal structure. Now, in this illustration, it is identified as the swing points with orange dots as the external structure, and then everything in between those points as internal structure. Now, we'll look at the both of these concepts briefly. The external structure is basically the swing point of highs and low in a trend, while the internal structure is any high and low that forms up within the swing high and lows of the trend. As illustrated on this slide, you can see that while the overall trend is a bullish trend, you can find the smaller structures within the highs and lows of the trends. You can identify a smaller downtrend and then a smaller uptrend within the highs and lows. Now, these smaller downtrends and uptrends are what are identified as internal market structure, while the overall uptrend is the external market structure. Now, as seen on this image, while this might look like a bullish structure, within it you can find the smaller highs and smaller lows and smaller lights, and even a very long range within the overall uptrend. Now, in this downtrend, you find that whenever there's a pullback before the break of structure, there's usually a smaller uptrend. You can find the smaller uptrend within the downtrend. And in this market range, you can find both smaller range uptrends and downtrends. And in this uptrend, we can find both a range and then a downtrend, and even uptrends, smaller uptrends. So guys, that's it for now. I remember Naku Daniel, the mastermind trader from the world's most popular SPAC nation.